Well, thanks to a media that loves to get clicks, one thing consumers often misunderstand is that the Fed doesn't actually set mortgage rates. And we saw this in 2024 when the Fed lowered their rate 3 times in 3 months and mortgage rates went up by as much as 1%. Remember that? The Fed is lowering interest rates, so why are mortgage rates going up? And the Fed cut interest rate, but mortgage costs jumped. Or how about these headlines? No, your mortgage rate won't go down with the Fed rate cut. And the Fed is about to cut rates, but here's why it may not lower mortgage rates. You see, the Fed sets the federal funds rate, or the rate at which banks and other financial institutions lend money to each other, so that they can meet mandatory reserve requirements. And when the Fed rate increases or decreases, it becomes either more or less expensive for banks to borrow. They then pass these costs on to consumers and to businesses in the form of higher or lower interest rate on lines of credit, auto loans, credit cards, and to a much lesser extent, mortgages. So while short term loans like the home equity line of credit and adjustable rate mortgages are closely tied to the Fed funds rate and feel some immediate impact, traditional 15 and 30-year mortgage rates are primarily influenced by a number of other factors, including global monetary policy and leading and lagging economic indicators such as the unemployment rate, retail sales, and the ever popular inflation. And basically the overall state of the economy. When the economy is doing well, interest rates are high, and if the economy is or is expected not to do well, interest rates are low. As importantly, and don't miss this because it's a very important nuance in the markets in general, and that is that any effect that the Fed does have on rates has already been priced into the market. You see, investors buy on the rumor and sell on the news. So when the market expects that the Fed will cut rates, or when the Fed indicates they're going to do so, that's when you see a lot of movement in the market. By the time it happens, it's old news. And that's why we always see rates fall preceding a rate cut, like we have over the past month. And like last year, we often see rates increase after the cut, and the market takes a clean look at the economic data. So now you know. The Fed doesn't control longer term mortgage interest rates, the market does. And I know the media loves to talk about mortgages and the Fed, but it's a completely false narrative and designed exclusively to get you to click. As always, please feel free to reach out to me should you have any questions or if you want to talk about your particular situation or the market in general. And thank you again for the opportunity to continue to earn your trust and confidence. For well over 20 years, my primary goal has been to become a long-term trusted advisor who can help you understand and navigate this extremely complicated and very dynamic mortgage market. Thanks.